Hello everyone, welcome to the channel, and for today I want to provide you with some reasons why you should not buy your cryptocurrencies at these price zones. I believe it's tempting, but I also think the market will trade lower, searching for more important price zones. Let's start with Bitcoin. I have a list to cover and a couple of patterns to share with you, and I hope the information that I share here brings some value to your own journey. Specifically for those who are learning process, I believe it's important to pay attention to some details in our charts. So hopefully the information that I share here, based on my own experience, 12 years already dealing with these patterns and harmonics and all those basic patterns. So hopefully that information brings you some value to your own journey. Let's start with Bitcoin. As I said, we have a list to cover: Ethereum, Binance, Solana, many others. So let's start. If you want to check my previous video, which is basically a sequence of this one, there's a link in the top right of your screen. You can click and you can check my previous projections for some of these cryptocurrencies. Bitcoin, weekly fractal support 56,500. So we are now threatening this major support level, and why I think it's important to wait for a bit deeper price on Bitcoin, lower prices on Bitcoin, is because usually when the price prints this kind of a cup and handle pattern formation, that's one of the patterns that may emerge for the Bitcoin, which points much higher, by the way. So in the mid-long term projections or long-term projections for this pattern points much higher. But usually when this pattern starts to emerge, there's one Fibonacci level that usually works as element of support. 38% Fibonacci retracement level. This is the most important Fibonacci level in order to offer strong support. And why I'm saying strong support, because usually when the market finds support at the 38% Fibonacci retracement level, of course preceded by a move to the upside in this case, usually that signs a very strong move or trend in the direction of the previous swing. So basically, if the price finds support at the 38% Fibonacci level, that's a sign of a potential strong move to the upside. And by the way, just to clarify, this is just a very linear and fast projection, just for you to take a look. This is kind of a projection for the default projection for this edge and shoulder, this cup and handle pattern formation. We are talking about 123.25 for Bitcoin. So basically there's a huge window above this major resistance for Bitcoin. But first, the market needs to find support. So if you try to anticipate this move, it may work. Of course, it will depend how you manage your risk, but in my opinion, I think we should wait for the dip into this 38% Fibonacci retracement level that may offer much friendly opportunity, let's say, to manage our risk and opportunity to engage with Bitcoin. The same may happen with Ethereum, also threatening major support 2809. But it's a bit different because Bitcoin, as you can see, did not retest the previous highs as Bitcoin did. So Bitcoin was trading above these highs and then started to pull back, and Ethereum did not retest the previous highs. So basically that's a 78.6% Fibonacci retracement level, and we have a major support. If you track the Fibonacci retracement levels, you can see the 38% Fibonacci retracement is actually now being threatened. So basically, if the price breaks this support, it will search for the next Fibonacci levels below. So in this case for Ethereum, One of the patterns that we can also identify, it's a technical double top. Okay, we have a perfect technical double top. Of course, this is our neckline. We have a neckline at 28.21, and if the price breaks below this support line, that will trigger this pattern, and the default projection for that specific pattern points at 1761 basically. Okay, that's a huge, also not a huge for the cryptocurrencies, not a huge drop, but it's a significant drop for sure. Eventually that will reinforce a trend line support covering these previous lows, or at least threat the violation of this structure, and eventually the market will find support later. But just to, and this is a step by step, so we will of course observe during this process. But this is one of the patterns that may start to emerge. So the double top, a technical double top. Usually we search for double tops at the top of the structure, of course, at the highs. This is a 78.6% Fibonacci retracement, but if you go into a candlestick chart, you can see the technical double top right there. We have the previous higher close, and we have higher highs above the higher close at the second top, a retest of the close prices, and then the price starts to drop. So that's a technical, that's how we identify a technical double bottom or double top in this case. Of course, that will depend on the breakout of the neckline, but if that happens, you already know one of the reasons why that can happen, and you already know where the market may dip or may fall. So we have 1742, 1740, basically back to the previous lows. This is Ethereum, and let's observe, as I said, a bit different from Bitcoin. As you saw, Bitcoin broken the previous highs, printed a new higher high, monthly fractal, and then started to pull back. Ethereum, not enough, not capable to retest the previous highs, and actually the 78.6% Fibonacci retracement was enough to create a barrier for Ethereum. Moving forward, you have also Binance Coin. I call your attention to this potential drop, actually very fast reaction, but I call your attention to the retest of these previous structure highs, very similar as on Bitcoin, 704, and since then the market, of course, synced into this 50% Fibonacci retracement level. As you can see, we are also unfolding into a potential cup and handle pattern formation. I will not be surprised to see Binance holding above this 50% Fibonacci level, but we have also a convergence between the gold and the 61.8% Fibonacci level and the previous structure resistance level. So a retest of these levels will not be a surprise. I imagine some kind of a consolidation process above this 50% Fibonacci level, but ultimately I will wait for the pullback to the golden Fibonacci and the retest of this previous resistance. Of course, that will imply Bitcoin and Ethereum to trade lower, and during that process Binance may trade sideways or eventually sync together with Bitcoin and Ethereum towards this next Fibonacci level. Solana, another pattern. Let me go into a lower time frame to show you this one. Daily time frame for Solana. By the way, we were checking weekly time frame charts for Bitcoin, Binance and Ethereum. This is Solana. I called your attention to this edge and shoulders pattern formation, and actually I called your attention to the fall from this golden Fibonacci retracement, the 61.8 acting as element of resistance, and forced the retest of the previous lows. Actually, I projected a fall towards 122.23, and actually the price has formed support right there and then started to unfold into this potential head and shoulders pattern formation. We have also a symmetrical projection which points roughly at 96.26. That's basically an ABCD pattern, so we can track this as a potential symmetrical pattern for Solana, and that points to, as I said, to 95.50 roughly, so basically pointing to new lower lows. So wait for that to happen. And the pattern that starts to emerge, the head and shoulders pattern, which of course we are tracking now, this support at 116.63, basically the previous structural lows and the previous fractal support level. If this structure breaks to the downside, I imagine a sink into this 66, 67. This is the 200% Fibonacci level, and this is the default target for the head and shoulders pattern formation. So of course that always depend on the breakout of the structure support. Wait for that breakout of support, eventually wait for a retest of this structure support again, and trigger your trade to the downside. I expect a move towards 66, 67 if Solana breaks below 122.23, basically the previous lows, should trigger this move. We have also Chainlink, another one that we projected from the golden Fibonacci on my previous video. As I said, you can also check that video on my page, but 61.8% Fibonacci retracement acting as a resistance. It's 1872. We have already new lower lows, and we have the symmetrical pattern at 1048. ABCD pattern projected just a few points below, and that's again one of the reasons why you should not try to buy your cryptos at this point, in my opinion, and it's because we have a couple of patterns projected a few points below, and I think we should wait for them to complete. Then we have also we have a couple of others to cover, but we have one of the cryptocurrencies that usually I don't track. Rapid Bitcoin. I confess I didn't know the existence of this cryptocurrency, but I've noticed the volume of negotiation on TradingView, at least the indications were significant at that time, and I started to track this crypto, and I found interesting the potential double top starting to unfold to this crypto. So that makes this level of support the neckline, and actually we are now threatening that level of support. We have a small range here to track, but again, a clear violation of this support level may trigger a move to the downside, and we have a couple of other patterns and Fibonacci levels that I think we should pay attention for, at least for this cryptocurrency. Rapid Bitcoin, 161.8% Fibonacci extension level, 45.97. That's a few points below the recent low, so wait for that crab pattern to complete. Eventually that will force a retest of this support again, and eventually a major recovery. But of course we rely on the first target levels, 38% Fibonacci level. If completed, we will target the 38% Fibonacci retracement, which points to the previous structure support level. So we have a convergence between the default target for that crab with the previous structure support, so it makes sense to go and retest this support again. And as I said, eventually recovering this fractal support may trigger a major move to the upside. Another one that I think we should be paying attention to, Uniswap from Coinbase. We are right above the golden Fibonacci extension level, but also Few more points below at $4.58 we have the shark pattern projected at 224% Fibonacci extension. If the cryptocurrencies in general, the Bitcoin and Ethereum, starts to drop below those support levels that we mentioned before, eventually Uniswap will probably sink into these lows, and I will pay attention to this bullish shark pattern projected at $4.58. Note that we are facing the golden Fibonacci extension level that offered some pressure. The market did not touch specifically didn't touch the Fibonacci extension level, as you can see, just by a few points. But we noticed some pressure at this previous support level, so that's the reason for this bounce. But I'm projecting this bullish shark pattern. It may offer much better risk-reward opportunities for those who are searching for long positioning for this crypto. The same may happen for internet computer. I shared the potential breakout of this structure before happening. So basically we were tracking the violation of this trendline support. We saw the market sinking into these new lows at $5.88, but we have other patterns at $4.14 that I think we should wait for. So if the market prints this bullish crab pattern at 161.8% Fibonacci extension level, that may offer a very nice position to the upside, and of course with the previous structural lows as a reference to our stops, we should not ignore this potential crab pattern for internet computer. Then we have also another one that I checked today, Filecoin, another one that emerges from the ashes. I'm not sure from where, but another one interesting with the bullish alt-bat pattern at the 113% Fibonacci extension. And let me tell you one thing, because it is important to consider this. If the market fails the 113% Fibonacci extension, usually the market will target the 161. If that happens, we are targeting below 0. So I think there is only one option. The market needs to find support above these previous lows. We have the 113% Fibonacci extension as a reference, and completing this bullish alt-bat pattern. So if for some reason you are searching for opportunities to buy today a specific coin, eventually this is the only one that may offer you a nice or friendly risk-reward approach, even though do not ignore potential moves to the downside following the major and the captains of the ship. Let me introduce you to the Forex Analytics platform. This is your access to our dashboard, and this dashboard allows you to get access to amazing, fresh, daily content related to the financial markets. We cover basic technical analysis, macro analysis, candlestick patterns, harmonic patterns, and Elliott wave technical analysis. All that together on a daily basis for multiple instruments for the Forex markets: gold, silver, crude oil for the commodities, Ethereum, Bitcoins in the crypto markets, but also the bunds, the bonds, SPX 500, the German DAX, and of course major Forex pairs, all together in one single platform. And at the top of the cake you have a chat room with all the community together, helping each others, and specifically helping those who arrive and starting to trade the market. So we have an amazing community ready to get you involved, and actually you can get access to this amazing platform for only $1 for the next 10 days. So the next 10 days actually you can access for 10 days for only $1, and then you can activate, of course, your subscription with this amazing team and this amazing platform with a lot of tools available for you, which will help you and will support you during these trading journey. This is an amazing team, always ready on a daily basis to support you and to help you during your journey, even if you are a new trader specifically, or even if you are a very experienced trader. I think and I'm sure the platform will bring value for you. So I hope you enjoyed this presentation. It's a very fast presentation, but a very humble invitation for you to join us at Forex Analytics. See you there. Another one, the same example. We have Cosmos, and I was using this example with someone else to explain the risk and the rewards when we trade these patterns, and actually I can share these thoughts with you too. So this is a bullish crab pattern completed for Cosmos at the golden Fibonacci extension level $5.10. We predicted this drop below this triangle. On my previous video you can see we were trading inside this triangle. We predicted the drop below this structure support, and we also predicted the formation of this bullish crab pattern. Of course, a prediction worth nothing rather than that. It's just a prediction. We don't react to predictions, you know. We only react to a specific pattern once formed. I will not short the market because I have a pattern projected below. I'm not sure if the price will complete that sequence or not, but based on the ratios and the Fibonacci ratios presented above, I actually started to project this potential bullish crab pattern at the golden Fibonacci extension level. So we have the bullish crab pattern completed. We have default targets for that pattern projected at $8.68, and I was trying to explain how we manage our risk. And there's two different well, in my opinion, there are multiple strategies to trade the market, and people use them in very different ways. So there's people who prefer to add or to increase their position sizing once the market confirms the direction, and usually those are trend continuation traders for, you know, which likes to drive the market in the direction of a major or a higher degree momentum. And there are, of course, other traders who trade inverted. So basically, instead of adding or increasing the position sizing, they prefer to start with, let's say, a default position sizing, and then they start to decrease or cut or pocket some of that money they make on a profitable trade. So instead of incrementing their position sizing, there are also traders who decide, inverted with that, to decrease their position sizing once the price achieves specific price zone. So, and that's exactly where I'm positioned at. So basically I use a strategy which allows me to pocket some money during this process and try to maximize my position with let's say smaller position sizes of my initial one. Let me try to explain this because I believe it's much better to explain with a picture and with this specific example. So let's imagine you trade MetaTrader platform. I don't use MetaTrader, so I don't trade on. I trade lots, but I use units to trade. So I don't trade based on one lot or micro lot or whatever. But let's imagine, to simplify this process, and because I know many of you use MetaTrader platforms, let's imagine you have a default one lot to trade, or on the Forex or whatever you want to trade. You trade usually one lot, and that lot that you trade, when you push your trades, and usually that lot that you trade when you put your stops represents something like 1% of your capital, okay? You never cross that level, or 1 or 2% of your capital at risk for one specific trade. And by default, you push a trade with one lot. Fair enough, you can manage your risk, you don't cross your levels of risk, so all fine. Usually, what I tend to do, I will try to cut and to start to partitioning this one lot during the process, during my trade. If the trade goes profitable, I prefer to start to partitioning. So if instead of keeping one lot in the table, I will cut in half, I will pocket some money, I will put my stops at break even, and then I will keep playing with 0.5 lots. And this is exactly the example here. So I have my entry point. Let's imagine a situation where you place an order to buy the market. So you have $5.10 golden Fibonacci extension. So this is your entry point. So this is your level of your entry. So, and you place an order to enter at $5.10. If you enter the market at $5.10, and if you expect the market to target the 38% Fibonacci retracement, because that's a default target for the crab pattern, so usually after completing the pattern, the market tends to search for the 38% Fibonacci level. That represents something like, I guess it was something like 70%, 69-70% move towards the 38% Fibonacci level. So this is your potential initial reward for this specific trade. One simple rule that you should apply on every single trade you push in the financial markets, regardless what markets you are trading, the cryptos, the commodities, the forex market, whatever. You should never enter the market to lose more than what you expect to win in a specific trade. So if you expect to make 70% profits in this specific trade, you should not use a 70% loss. Or let's say you should not use an 80% or more, actually I need to put this. So if I'm using a potential reward of 70%, I'm not allowed to put my risk at 92. Okay, the maximum that you are allowed to use is a 70% risk, which creates basically a 1-to-1 risk reward. If you push the trade with 70% with your stops, 70% below your entry, with your targets 70% above your entry, of course we are trading a 1-to-1 risk reward. So usually when we trade harmonic patterns, we tend to minimize these losses. So usually what I try to do is to try at least a 1-to risk reward approach. For each dollar that I put at risk, I will gain $2 if the market goes on profit. Okay, so instead of putting my stops below, I will put my stops at 3.41. My targets remains at 8.67, and that creates a 1-to situation to trade, a 1-to risk reward trade setup with one default lot. If for some reason I need to extend my stops because I have structure or supports, previous support elements or previous resistance that I think the market may threaten, but if for some reason I need to extend my stops into a 1-to-1 risk reward approach, I always decrease my initial position sizing. So instead of trading, or instead of pushing my trade with one default lot, in my case, as I said, I trade in units, but instead of pushing my trade with one default lot, I will try to decrease these 0.8, 0.5 if necessary, and I play from there. But let's imagine a situation where I push this trade with a 1-2 risk reward approach, one lot by default. What should I do if the market achieves my targets? Of course, I don't need to argue what should you do if the market achieves your stops. Okay, we all agree, if the market achieves your stops, just move forward, try to search for the next crab and put the plan in play. Okay, the same plan. Don't try to mix and try to, oh, this time I will target the 58, the 61.8, which allows me to extend my stops. No, because the market will not target initially the 61.8, it will target the 38. So you always need to rely on specific, let's say, historical performance of this specific pattern. That being said, we have one default lot. What should I do if the market achieves my targets? First thing that I do, I cut my position. So I have one lot, I close half of this initial position sizing, or initial position size, so I close into 0.5. I keep my 0.5 position size in the market. I close half of my position, so I close in at profit, of course, and most important, I move my stops to break even. Okay, at this point I have no risk in this trade, so at this point I have zero risk in the market. I've already achieved my default target, and I have the potential to maximize my my profits, because I have a second target placed at the 61.8% Fibonacci retracement level. Let me try to. Okay, so we have our default targets already predefined. We have our entry, we have our stops, we have everything already in the plan. What should I do when I achieve my default first target? Break even my position, close half of my initial position size, and wait for the second target to be achieved at the 61.8. Let's imagine a situation where the market actually targets the 61.8. So you already have your stops at the goal, at the break even. You have your stops at break even. You already partitioned your position, so you have already 0.5 lots in the market instead of the initial one lot. What should you do when you achieve the golden Fibonacci level, your second target? So what I tend to do is I keep partitioning my position. So instead of the 0.5, I will keep closing my profits, or some of them, and I will keep one tiny position in the market at 0.25 lots remaining, 61.8% Fibonacci level achieved. And if the market achieves these levels and starts to trade higher, there's also a new surprise here in this strategy, which is the trailing stop. If you know how to use the trailing stop, use it. It's a huge benefit. It will help you a lot also with emotional reactions. And if you can plan that with anticipation, even better. So if you know, or if you know, or if you don't know, and if you want to learn, please do it, because it will be extremely useful. So what I do when I achieve the 61.8% Fibonacci level, I activate a trailing stop from my break-even levels. Okay, so every move the market prints above the golden Fibonacci, I will force my stops to follow it. So if the market for some reason trades, if the market trades above my second target towards, let's say, 11.93, my stops at that point will be already adjusted at $6.11. So if the market trades higher, let's imagine the market prints a 24% move above my golden Fibonacci level, the same I will expect. I will expect my stops to move automatically with a trailing stop, and at some point, if the price trades at these levels, $13.60, I will expect my stops to move automatically to $7.81. Okay, if the price starts to fall from here, my stops will remain here. Okay, our stops will not move down if the price moves down. Your stop loss, your trailing stop, of course, always move in the direction of the profits, and it will lock there. If the price starts to drop, and if your stops are positioned at $7.81, that's where your stops will be placed, so they will not drop synced with the price. Of course, that's not the objective of the trailing stop. It makes no sense. The objective here is to track potential moves above one specific price and force your stops automatically to adjust to this same movement. So just to rephrase, two default targets for this pattern: 38% Fibonacci level as a first target, close half of my initial position size, 61.8, keep closing half of the remainings. Your stops from break even should be supported by a trailing stop if the market achieves your second target. And that also completes the full strategy that I think it's very simple to understand and is very practical, and is much more practical once you put it in play at least once. Try to use that strategy once, and I guess you will not unless you have a better one, but probably you will not want to leave this one, specifically if you trade those harmonic patterns. Of course, that's my focus. I'm joking, probably you have a much better strategy to trade than this one. And by the way, if you have it, just share it in the comments. People will enjoy for sure to read, and I will also enjoy to read it. But that's what I do. That's what I tend to do. I try to use partitioning in my trade setups, and I try to maximize my profits with a trailing stop. And that's one of the suggestions that we have for today for Cosmos, which is trading the golden Fibonacci extension level, completing the bullish crab pattern. So I hope you enjoyed this example. Let's just finish for today with the other three cryptocurrencies that I have to share with you. Nothing much specific, but we have also Polkadot. I have targets for Polkadot at $3.81, so that's also a significant move below these support at $4.99, $4.95. As you can see, we are also retesting these previous structure highs. We are facing previous structure support levels. This is a nice resistance at $6.61. So basically we have a range already to track for this crypto, but ultimately I will expect a retest of these lows at $3.80 for Polkadot. Then we have also Avalanche, another one approaching, at this point already approaching the 78.6% Fibonacci retracement level. We track the possibility of a drop below this flag pattern, confirmed, and this is one of the patterns that we have projections below the previous lows, but it keeps above negative territory. So as I said, I shared it before with you, one example where we have projections below zero, and the only solution is to try to find support above those levels. This is Avalanche, one example that actually can force the price to approach this, to trade below these previous lows, which keeps the crypto in positive territory 2.45, that's a default projection for this edge and shoulders pattern formation for avalanche. And to finish for today, very much the similar patterns. We have also Cardano. Exactly, I was missing. We have also Cardano with a default projection at 0.27, but also at 0.15. So 0.15, this is the 200% Fibonacci extension level. This is the default target for this edge and shoulders pattern formation, but also I'm pointing to this golden Fibonacci extension level, previous structure supports, 0.22. This will be a nice level to track. Bullish crab pattern at the golden Fibonacci extension level. This is one of the examples where we can actually very much the same as the one at Cosmos, the bullish crab pattern. We have also Cardano with one crab pattern projected below. So this is just one of the motives why I think we should wait to buy our cryptos, for at least for those who are trading the cryptocurrencies. That's one of the reasons why I think we should wait for lower prices on the crypto market in order to try to maximize, or to create at least to create a friendly risk-reward approach. This is a crab pattern. We can create a plan already to trade this pattern specifically. So we have an entry point at 0.2246. You have your target, your first target. Oops, trying to push my tag. 44.88 first target. You have also the golden Fibonacci levels, 58.78. Your first target already offered you guidance for your risk. 99%, or let's say 100% move towards the 38% Fibonacci level. We can try to use 0.25. We can try to use 25, 50%, depend on your preference. 50%, 1-2 risk-reward approach to the 38% Fibonacci level. So this is the plan to trade this specific pattern. You put your stops below 1109, targets above. You already know what to do if the market achieves the first target. Start partitioning and activate your trailing stops. Move your stops to break even once you achieve your first target. Nothing complicated, something that you can use and repeat forever in the next 400 trades. I can guarantee you will succeed if you use a strategy like this. If you use a strategy where you enter the market based on a specific pattern to trade, you enter the market with an expected reward higher than your expected loss if the market fails. And if you repeat this process, and specifically if you try to maximize your profits using a trailing stop, that may help you also with your emotional reactions in the market. And that being said, that completes my approach for today, and I hope to see you in the next video. Stay